Morning, everyone. I wanted to do a quick video to help you with, I believe it's number 11 for the homework. Let me share my screen. Okay, I think you can see this now. So this is very similar to, I think it's number 11. It's looking at sales related transactions using the Perpetual inventory system. So here's the sample. Let me go through and do this just to help you out. Sold merchandise on account to landscape company 33,450 terms FOB shipping point. End of month, the cost of goods sold was $20,000. Okay, so let's go through and take a look at these transactions to see how we'll do this. Okay, so we're going to do accounts receivable landscape company for 33,450. Okay, and then this is going to be sales 33,450. Okay, all right, let's take a look at the next transaction. Sold merchandise. Oh wait, hang on, we have the cost of goods that we need to do as well. So we're going to do cost of goods sold for 20,000. Remember, we're pulling this out of cost of goods. That's why it's a debit, and we're going to be pulling inventory. Okay, and that's going to be 20,000 as well. Okay, remember, this is we're doing double entry accounting here. Okay, so let's take a look at the sold merchandise for 86,000 plus 8% sales tax to retail cash customer. The cost of goods sold was 51,600. Now notice this one was to landscape company. This one is cash. So that's why there's a difference in that. Okay. So let's take a look at this. We received cash, 92,000. Okay. So what I'm going to do here is 86,000. Let me get this 86,000, and I'm going to multiply that times 8%, and I should get 6,880. Okay, 8% of 86. I'm going to add that back to 86,000, and I should get 92,880. Okay, all I did was multiply 8% times 86,000. And then I added that sales tax back to it. Okay, I'll show you how to record that here in just a bit. Okay, so 92,880. Okay, no credit here. I'm going to go down here to sales right here, and our 86,000 told us this. That's what it was. Then our sales tax now. Our sales tax payable. Now this goes into a payable because remember, we pay. More than likely, you're going to pay quarterly, or you might pay monthly as well, depending on how much you make. So when I went and multiplied 86,000 times 0.08, I got $6,880. Okay, so when I combine those, that's what gives me 92,880. Okay, now we got to do the cost of that. Okay, so they said our cost of goods was $51,600. 51,000. Okay, so this is going to come out of our cost of goods sold for $51,600. Okay, and then we're gonna credit inventory for $51,600. Okay, all right. So moving on to July 5th. July 5th, we are told sold merchandise on account. So this is going to be a receivable. When it says on account, that's going to be a receivable to Peacock Company for 17,500. Terms FOB destination, you get a 1% discount if it's paid within 10 days. That's how you read that. And then the entire payment is due within 30 days. Okay, so you only get a discount if you get it within 10 days. The cost of goods sold was 10,000. Okay, so let's record that transaction. So let's see. Okay, so we sold merchandise for, what does it say? 17,050. Okay, so what we're gonna do here is we're gonna take our 17,500. Hang on one second. Just one second. I'm having to move to a different room because my family's back. So just one sec. Just one second, if you can hear me. All right, so where was I at? Okay, I need to do the discount. So the discount, 17,500. Now we get a 1% discount, okay? So times 0.01, you'll get 175. Okay, keep that in mind. Let me write it down. 175. So we're gonna take that away from $17,500, okay? So that should give us, all I did was I gave the discount, they paid within the 10 days. Okay, that's what that's saying. All right, and let's see. Sorry if you hear the dog barking, but my family's back. All right, so I'm going in here to accounts payable. Again, all I did was take the 17.5 minus our 1% discount of 175, which will give me 17,325. Okay. And then I'm going to go to sales, and that is going to be, again, 17,325. Okay. Whoa, not 125. Okay, 17,325. Okay, now I got to take care of my cost of goods sold. Let me just double check it. Cost of goods sold was 10,000. So I'm coming down here to cost of goods sold for 10,000. And then I'm going to inventory. Notice how there's a pattern here. Inventory, 10,000. Okay. And then, okay, so we did our sale to receivable, and then we pulled it out of our inventory as well. Okay. We should, whenever you cost of goods sold it, that becomes an expense. Okay. That's an expense that goes directly to your income statement. Okay. And notice how we pulled it out of inventory. Okay. We pulled it out of inventory. All right, so we just did, okay, we did this one. So we sold merchandise for 112,000 plus 8% sales tax to retail customer who used Visa cards. The cost of goods was $67,200, $67,200, okay. So let's see, let's go down here. So what was our sales tax? 8%. So we're gonna take our sales tax of, well, we're going to do 112,000 times 8%, 0.08 gives us $8,960, and we're going to add that to our 112,000. So this 112 right here, we're going to take 8% of that and add that back to the 112. Okay. So let's go down here and record that transaction. So we're going to we receive cash now. Now keep in mind, even though the customer used a credit card, we record it as cash. Unless if we create an account for them, then we would say account receivable. Okay, so $120,960, and that was whenever we took our 8960 plus our 112,000. 120,960. Okay. Now we're going to, that's 112,000 of that is going to sales. Okay. And then our sales tax. Okay. Sales tax. Now we're doing payable. Okay. It's a payable. But the reason why it's a payable is because we're putting it into this account until when we pay our taxes. Whenever we say paid taxes to the state, then we pull it out of payable. We pull it out of payable, and then that goes into an expense. That's whenever we expense it, because we're accumulating all the sales tax into the sales tax payable account. Okay, now let's take a look at our cost of goods sold up here. Our cost of goods sold for this account is $67,200. $67,200. So I'm going to go to cost of goods sold. Remember, we're expensing this $67,200. Okay, we're expensing it, and we're going to pull it out of inventory. Okay, $67,200. All right. Okay, so we're good with that one. Remember, we did the sale and we did the expense it. We sold it, we expense it. Every time you do a sale, you have to expense your inventory. Okay, so let's go to July 13 now. July 13, sold merchandise to customer who used MasterCard cards, 96,000. The cost of goods sold was $57,000. Now keep in mind here, notice it didn't say sales tax. So for some reason they didn't pay taxes on this. Okay, sold merchandise. Okay, so we got to come down here. Okay, all right, and we're going cash. Remember, we record it as cash because there's no interest for us, or we're not charging. It's not one of our accounts. They're paying. We just have to call it cash. Okay, and then we're doing sales. 96,000. There's no tax. There was no 8% tax on this one. Now we got to look at our cost of goods for that. 96, so $57,600. $57,600. $57,600. So this will be cost of goods sold, $57,600. Okay, and then we're going to pull it out of inventory. Once it's, remember, our products are just sitting in inventory, which is a asset account. Once we pull it out of our inventory, we're sending it to cost of goods because we're expensing it. We are pulling it out, but we're putting it into our expense. So we're saying this is how much it costs for us to do this, $57,600. Okay, now we've got to go to July 14. July 14. Sold merchandise on account. So when I hear account, you automatically have to think receivable. Loeb Company, 16,000 terms, FOB shipping point. So they get a 1% discount if they pay within 10 days, but the balance in means this value. The balance is due within 30 days. Cost of goods sold was 9,000. Okay, so we're going to go down here. Our amount was 16,000, so they're getting a 1% discount. Okay, 1% discount. They're getting a 1% discount. Hang on one second. FOB shipping point. FOB shipping point, let's see, 14 FOB shipping point. FOB shipping point, okay, so 16,000, so 16,000, I'm on my calculator, 16,000 times 0.01, and that gives us $160. So 160. So we're going to take our value of 16,000, not 16,000, and we're going to minus $160 because they get a discount. So that value will be 15,840. Okay, all right. So again, you are going to need do some calculating. So let me go down here and record the transaction. Okay, account receivable to Loeb for 15,840. Okay, and then we're going to put it in sales. All right, we're putting it in sales and 15,840. Okay, all right, and now we got to, how much did it cost us? It cost us, where did it go? $9,000. So $9,000. We're going to go COGS, cost of goods sold. And this will be 9,000. And then we're going to go to inventory for 9,000. Just like that. All right, now let's move to July 15. July 15. July. Received check for amount due to Peacock Company for sale on July 5th. Okay, so we received some money. We received some money. Okay, so now let's go down here and record it. We received how much? Received money on account from July 5th. July 5th. So let's see what July 5th was. July 5th, 17,325, 17. So this, we're pulling this out now. So what we're going to do is we received it. They sent us a check. So we're saying cash, 17,325. Notice how we referred to it and looked up at it. Okay. Now we're pulling out of the account receivable from theirs because we're saying, oh, they paid on their account. So we're going to zero it out, 17,325. So now their account will say zero balance. Remember, when we have the T account at the bottom, initially we put it a credit of it, and now or a debit of it, and now we do a credit of it. Now that account will be zeroed out. Okay. All right. So let's go to the July 16 transaction. Issued credit memo for $3,000 to Loeb Company for merchandise returned from sale on July 14th. The cost of the merchandise was $1,800. So they returned some stuff, whatever the reason. It wasn't up. It might have been damaged. Actually, if it was damaged, we put something else. But they just returned it for some reason. Maybe they didn't need it. Okay, so they returned it for $3,000. Okay, so let's see. Oh, keep in mind that they had a discount too. They had a discount. So let's go down here. I think it was 1%. So let me see what 1%. So it was 3,000. Going back to my calculator, 3,000 times 0.01 gives us a $30 discount. So okay, $30 discount. Keep that in mind. Okay, $30 discount. So customer refund payable. The reason why is we're pulling it out of their payable account. $29.70. Okay. Now we're pulling this off of account receivable, because remember, we put it into account receivable. So we're pulling it back off. All right. $29.70. Okay. All right. Remember, we had a cost of goods for that particular, it cost us. So we got to see what that amount is. 1,800. Okay. 1,800. Okay. We got to record that transaction as well. So we have to do inventory because we're pulling it. What we're doing is we're putting it back into our inventory because it's back with us. Does that make sense? It's back with us. So if this was it, they gave it back to me. So we're putting it back in our inventory, $1,800. Now, estimated returns inventory is where it's going to go. Estimated returns inventory, that'll be 1,800. Okay. All right, so now we can move on to July 18. July 18, let's see what happened. Sold merchandise account to Jennings Company for $11,350. Terms FOB shipping point, they get a 2% discount. Right here, I'm reading this right here. They get a 2% discount if they pay within 10 days. Otherwise, the balance is due within 30. They paid $475 for freight and added it to the invoice. The cost of goods sold was $6,800. $6,800. Okay, so let's see. So what happens is they get a 2% discount, but they paid for freight. All right, so see what this is going to look like. So 11, I might need to reduce this on paper. 11,350 times 2%, 0.02 gives us, I better write this down, $227. Okay. Now we have to subtract that from $11,350. Oh, that doesn't look right. 11,350 minus 227. Okay, that gives us 11,123. Okay. All right, so we'll take care of this freight here in a bit. Okay, so let's do this sale first. Okay, do our sale first. Go up here, all right, and do accounts receivable, Jennings Company. 11,123. Okay, now we're going to go to sales because we sold it. 11,123. Now our freight, 475. I remember it's 475, but I'll double check. Paid 475 for freight and added it to the invoice. Okay, 425 and added to the invoice. 475. Okay, so accounts receivable. Now notice how we added it to it. Okay, so it goes to our receivable, and that's 475. Now they paid cash on it. They paid cash on it for $475. That's why they said they paid it. Now we have to record our cost of goods sold. I gotta see what that is. 6,800 for cost of goods sold. Cost of goods sold. Remember, we're going to cost of goods sold is 6,800. Now this is going to go in from our inventory for 6,800. All right. So that's July 18 costs. Okay. Now let's go to July 24th. July 24th. Received check for amount due from Loeb Company for sale on July 14th. Less credit memo on July 16. So we got to see what that balance is going to be. Okay, we got to see what that's going to be. Okay, so let's see. So they gave us a little info right here. Received check in amount for sale on July 14th. How much was their sale on July 14th? July 14 was 15,800. I'm gonna write this down. Okay. Now remember, there was a credit memo. There was a credit memo of on July 16th. Let's see what July 16th credit memo was. July 16th credit memo 2970. It's $2,970. So our balance was before was 15,840. Okay, so then we had a memo of 2970. And so what we did, what I needed to do was take our 15,840 minus this 2970. Okay, so the cash due to us will be 12,870. Okay, so 12,870. Okay, so I'm going to go, we received it cash, 12,870. Okay, if you had T accounts, this would all be in there. Okay, if you had those T accounts, let me see if you, no, I don't think there's any T accounts. Okay, but if you had T accounts, you would, it would be a way to keep track of them. Okay, now we're pulling this off. Now we zeroed out their account because they, remember, they settled up. They settled up, they paid. Okay, 12,870. All right, now let's go to the July 28th transaction. July 28th transaction, July 28th. Received check for an amount due from Jennings Company for sale of July 18. So July 18, what was July 18th sale? July 18, July, okay, $11,123, $11,123, okay. All right, okay, 11,000. Okay, let's see. July 18th. Okay, let me double check something really quick. 11,123 plus 475. Okay, now keep in mind these two were added to the transaction. So what I have to do is combine this 475 and this 11,123. Okay, 11,123. Okay. All right, so here's how we'll record it. This will be cash. We received cash in the amount of $11,598 because I combined it. Remember, it said to add it to invoice, so it went to that account. Okay, and then I have to do accounts receivable, and that's going to go down. We're pulling it out of it. 11,598. We're pulling it out. What's happening is they're paying their bill and it's zeroing out. Okay. All right. And then, okay, so July 31, July 31st, paid back lab delivery service for $8,550 for merchandise delivered during July to customers under shipment terms of FOB destination. Okay, so now we're going to pay this FOB destination. Okay, remember, deliveries are expenses, so we're definitely going to be expensing this. Okay, 8,550. Okay, where are we at? Okay, here we go. So delivery expense. Remember, expenses go right to our income statement, $8,550. Okay, we paid that with cash. If they would have given us a credit line, then we would put it as payable. Okay, but we paid cash 8550. All right. July 31. July 31. Received check for amount due from landscape company for July 1. July 1. See what happened July 1. Okay. All right. So they're going to pay this now. They're paying this. So July 1, let's see what it looked like. So they're going to pay $33,450. $33,450. Okay, they're going to pay that account. So we're collecting it. They pay to send a check, 33,450, and their account is zeroing out, 33,450. Okay. Now let's see what happens on August 3rd. August 3rd. Paid Hayes Federal Bank $3,770 for service fees for handling merchandise and beats to sales. Okay, so we're paying this. Remember, any service fees are going to be expensed. Okay, $37.70. $37.70. Okay, I go down here. In fact, for my business, every time I use PayPal, I get like a 1% fee on every transaction. So I actually expense those out immediately. Credit card expense, and those are written off on your taxes. Okay, and then we paid cash on that. 3770. Okay, almost there. It's a lot of work. I know we're probably going on 15-20 minutes, but that's how accounting is, right? There's times I go through and do tax for quite a while. Paid $41,260 to state sales tax division. Remember our account payable where we were collecting all the taxes from whenever we made sales? Well, that's where now we're going to settle it. Now, so we pay this monthly, okay? So our tax, look at our tax, $68,880. $89.60, add those together, plus come on, where'd they go? Okay. No, it was more than that. It's more than that. I remember there was more. We had a lot. Sales, okay, let me see tax, $68,880. $89,600. Where we go? I'm just trying to find all these expenses. Let me see something really quick. Hang on. Okay. Where's my sales tax? Trying to find all my sales tax. Just one second. No, they're in here somewhere. Okay. All right. Okay, so there we go. All right, so I went through, added them up. $41,260. So we're gonna pull this out of our sales tax payable. $41,260. And this is coming, we're paying cash on this. Remember, we've accumulated this, 41,260. Okay, 41,260. All right, so we went through, we did all of these, make sure we didn't miss anything. Make sure we didn't miss anything. Okay, did we miss anything? Okay, we didn't miss anything. All right. Oh, duh. 41,260. Okay, so anyway, so actually what's going to happen, there's going to be a balance in there. Okay. That means we still have a payable. Okay, let's check our work. Oh, good. Yes. Green for go. Okay, green for go. So take a look at those. If you have questions, please let me know. I can jump on a Zoom line and go through and help you through this process as well. Okay. Again, let me know if you have any questions.